we talk so much about the headlines here. We're already starting to see some signs of oil prices at least coming down and maybe demand being impacted. Is that something that has legs, or is this just a maybe tiny consolidation phase before a move back higher for oil?
I think we need to remember that we do have an overall energy crisis globally. I mean, look at coal prices in Australia. They are trading at $400 per ton versus normal 80. Natural gas prices in Europe are trading at $275 per barrel of oil equivalent. And, we have more than $200 for natural gas, LNG in Asia, in dollar per barrel of oil equivalent. So, we're all focused on movements in the crude oil price, which has sold down on recession fears. But we still have a super tight crude oil market with very, very strong backwardation, where the price of the September contract versus October contract, it has a premium of more than $4 over the other. And dated Brent is, the real spot price for crude oil is trading at $108 per barrel. So, it's still super high energy prices, and we are focused on oil predominantly, which is the most liquid and visible element of the energy aspect.
So Bjorn, I wonder when the Ukraine-Russia war first kicked off and the reaction from the international community came out, there was this understanding, right, that the energy markets would go higher because of the immense amount of pressure being put sanctions-wise on Russia. Do you believe as though the Russian energy story for both gasoline, crude oil, nat gas, and everything else is still the kind of linchpin, if you will, to the global energy markets right now? If something doesn't happen with Russia, what exactly then does happen to those energy markets as we approach that all-important winter season?
I think it's important to emphasize that Russia is the world's biggest energy or fossil fuel exporter of oil, natural gas, and coal together. They export normally something like 5 million barrels per day of crude, 3 million barrels per day of refined products, and then 4 million barrels of oil equivalents for natural gas plus coal. So this is the elephant in the world in terms of energy exports or fossil energy exports. So when you tamper with these exports, you have an earthquake in the energy market as a consequence.
Bjorn, let's kind of bottom line this. How bad could nat gas prices and crude oil prices get if something doesn't really happen with regard to Russia and Ukraine?
Something has already happened, and we have a severe reduction in exports of natural gas from Russia to Europe of a reduction of more than 2 million barrels per day of oil equivalents versus normal 3. So we've lost like 66% of natural gas exports from Russia to Europe. And when this gas doesn't go to Europe, it goes nowhere. And it's not possible to reroute it to the rest of the world. So that basically means a massive reduction in energy supply to the world as the flow stops to Europe. Europe then move into the global market and buys as much natural gas on LNG and coal as it can to compensate, thereby creating a very, very tight global market for fossil fuels altogether, of which oil is just one of the pyramid elements. Russia is today in a proxy war with Europe and the US, and Russia, Putin, is not going to let Europe and the US easily off the hook in this respect. Russia has the upper hand in this because they are the biggest exporter in the world, and they have the resources to export it or not, and they can decide to hold back if they want to, creating a massive amount of pain to Europe and the US consumers.